what's good, everybody? Happy Friday. How you doing? Welcome to the Closing Beat. We're financial advisors here with Jazz Wealth. I wear the shirt every day with the logo on it, so in your brain you go, where do I go to open my long-term retirement investment accounts or just long-term investment accounts? Well, that's Jazz Wealth. We hope you'll keep us in mind there. We're trying to do things a little bit differently, so we'll help with all sorts of investments that you have. We'll help you get your dough straight, budgeting, financial planning. We'll even teach along the way. Every week we do a class to teach our customers how things work. Last night was our last class, actually. Went really well. It was our portfolio update, now available in the dojo. That, by the way, that's like our little private video library with all of our weekly classes. We cover all kinds of things from trading to personal finance, portfolio updates, you name it. Wherever people need help with, I focus on there. We're also playing a game. It's called Guess the Dow. We're playing it here with you guys. You don't have to be a customer to play, but one of our customers won today. Longtime customer of ours, Chiranjeev Patil. You're our winner. Already sent out the email, and Chiranjeev said, go ahead and just credit my account $100. I don't want the gift card. I'll take the $100 and reinvest it. Chiranjeev's guess was 26799.99. They were the closest without going over. And so just emailed him to let him know we're going to be crediting the account, the $100 there. Lori L., I won't say her last name because she's not one of our customers. She only went over by 2 points. So Lori, you were so close. You can try again. You can play every week if you like. There's no strings attached, no marketing games, gimmicks, or tricks like that. You just go to that website there, Guess the Dow, and you're welcome to play, right? So we'll send you a $100 gift card if you win. And if you're one of our customers like Mr. Chiranjeev, we will credit your account $100, or you could take the gift card if you like. If you want to know the stats on that one, 35% of you guessed that the Dow would be higher than where it closed. That's impressive. I mean, we're kind of coming off a week last week. We were down, or at least a little bit weaker. And the fact that 35% guessed higher, I thought that was a little bit high, but you guys are bullish out there, or most of you are, or some of you are. So all good there. Anyways, enough of that. Let's move on to the stock market. It's Friday. The markets were higher. The Dow added 319, so make Chiranjeev our winner. 32 on the S&P, and the NASDAQ added 106 on the day. That sounds great, but if you look for the week, the S&P was up just over 0.5%. That's not bad, actually. The NASDAQ added close to 1%, and the Russell almost added 1% as well. So decent there after, a little back and forth. Strong finish. At least I'll consider that a strong finish. We went over all the stats going forward for what to expect the rest of the year with our customers last night in the portfolio update, so check that out. We also started with a gap higher of 1% today. It's not going to show on this chart because, let's see if we can switch. I'll use the SPY so you see the gap on the chart. See the distance between yesterday's close and today's open. That was over 1%. We gapped higher after already being up 1%. So very strong. You look back, you find that that's only happened 2 other times this year. And just as a side note, 5 days later, we were down 1.5% and 1.4%. The last 2 times that happened back in August and in June. So if you're curious what's going to happen going forward, it'd be very normal for the markets to pull back over the next 5 days. It's actually the 5th time this year that we've gapped higher by 1%. A gap just means the distance between the close and the opening price, right? So if we're not showing pre- and post-market data on our charts, then the charts present a gap, right? So we consider pre- and post-market sort of off the charts there. 9:30 to 4 p.m. each day is the only thing that gets reported on most people's charts. Anything else is representative. It shows a gap. So when we say a gap, that's all we're talking about there. Also in the dojo, we have 3 candlesticks classes for our customers. If you want to dive in there and see what all this stuff means, you can check that out as well. This morning, you got tweets from President Trump saying there's some good vibes going on in this trade stuff. He was really nice. It was probably the nicest tweet he's ever put out in his life. So it really sort of set the tone for the day that things were going to be really well. We had the meeting with the vice premier at the end, at the end of today. And overnight they said, the Chinese said, he's been given top-level negotiating status, meaning he can make any deal he wanted to make going into it. You also had the Fed come out and say, yeah, we're going to go ahead and continue with the plan that Jerome Powell was talking about. $60 billion a month they're going to use to buy the T-bills. And they're going to do this through next year, by the way. So through this next summer, they're trying to stabilize the overnight lending rates, and they're having a hard time with it. So $60 billion, he said, in no way is this quantitative easing. Don't think that we're going back in there and trying to support balance sheets overall. This is simply just a tool that we use to stabilize the overnight markets there. So that helped. I mean, the markets were a little bit higher on that sort of confirmation there. If you don't know what they're doing, they're trying to steepen the yield curve. What did we talk about last night with our customers? Right? That yield curve steepening. What does that mean after being inverted? Well, now you have confirmation that the Fed is intentionally trying to do something that we now all know the stats on there. So just a heads up, I'll be pointing that out in all of the forward portfolio updates that we do for our customers. You also had consumer sentiment that came out. Consumer sentiment was good. Oh, is that good? Yeah. Consumer sentiment came in better than expected. Always good news for the retail sector going into the holidays there. So if you follow consumer sentiment, October, November, December, we want to see that people are going and spending money. They're positive about the markets. They want to spend more money. And so that helps the holiday season there. So that was good news as well. In the afternoon here, of course, at the close, we got the announcement that there was a, quote, substantial phase one agreement agreed to. There'll be 2 or 3 more phases of this plan. As far as the trade deal goes, they're going to buy $40 to $50 billion worth of agricultural stuff from us. We're not going to raise the tariffs next week. And they're going to dial in this phase one plan over the next 3 weeks. Personally, and this is just my opinion, I don't normally share that, but personally, I would have liked to have seen some of the tariffs come off, right? The fact that we've agreed on a deal not to raise tariffs and that we're going to hold hands and everything going forward, that's okay. But right now, companies are reporting that those tariffs are mostly hurting them. So I would have liked to have seen some sort of like cut back in tariffs, like scale it back a little bit, go back down to like 10% or something. We just didn't get that. Maybe that'll be part of the trade, the phase one, but I don't know. I just kind of thought that would be part of the deal. And so for me, it wasn't really all that exciting as much as maybe it could be there. So that's that one. Anyways, let's go over to the charts. We'll keep going with that as we talk about it here. Anything trade sensitive today sector-wise did well. Semiconductors popped up to new highs there. Didn't finish the day at those highs, maybe a little extended, but that was the trade sensitive area. Semiconductors did well. Industrials did well today also. Helped a little bit by Fastenal, which we'll cover there. If you look at the price of oil, it was higher by 2.5%. Didn't really make like front page kind of news because the trade talks were there, but strong move in oil. Iranian oil tanker was attacked. A couple missiles hit them. I don't know who it was. I didn't really read into it much, but that was the price of oil helping be supported today. Consumer sentiment numbers helped the retail sector, although it's still stuck right at the 200-day moving average there. That sector was higher by 2.19%. Sorry about that. And a couple other sectors that I noticed hit the 200 and couldn't get back above the 200-day moving average. Regional banks in there. You got transports, hit the 200, couldn't get quite above there. So something to keep in mind. I use the IYT to look at transports if you want to look at them there. In the REIT category, looks like the ICF hinting at maybe a little bit of a breakout. Just a tight, strong uptrend there that could be hinting at a new breakout. REITs today pulled back just a little bit because you had rates, yields headed a little bit higher there. So that was the REITs. Basically your defensive areas all took a hit today, down 4% in the gold mining stocks. If you look at the price of gold, that was down about 0.5% on the day. Silver also lower on the day by a little bit, a fraction of a percent, so not a big deal. Just wasn't a lot of excitement there considering all the focus was over on anything that was trade sensitive. We look at some of the individual stocks today. Slack was higher. The ticker symbol is WORK, W-O-R-K, but this is actually Slack. Not sure why they didn't choose Slack, but maybe is it taken? S-L-A-K maybe they could have chosen. Is that taken? No. S-L-A-C? No. I don't know. For some reason they chose WORK. But the stock was higher by about 10% on the day. They said in September we have more than 12 million daily active users and about 6 million of them were paid members. That was better than expected, so maybe Slack turning the corner there. Ford was higher today despite Chinese sales coming in weak again. So for the third quarter, they saw sales decrease by 30%, not 3%, 30%. In the first quarter, I looked it up, 36% decline in Chinese sales in the first quarter of this year, 22% in the second quarter, now 30% in the third quarter. Something about that not working out over there. Roku, a little bit higher on the day. They were upgraded at RBC Capital by one of the better analysts, by the way. Really good analyst there for RBC. He said that the fact that this stock has fallen over 30% here now represents an attractive valuation. A couple other analysts have said that as well, that given how far it's fallen, it's worth taking a shot. He also likes their overall positioning in the market, and so the stock was a little higher on that news. One of the reasons is he's a good analyst. 60% accuracy with a 19% average gain on all of his calls over the last 12 months. His price target is 155, by the way. That puts you right back up, right about there. Average price target on the stock is 129.10, which you'll probably see some of that adjusted here if the stock starts to trade inside of this little area that it's at the moment. So that's Roku. I just want to point it out. I know some of you guys are looking there. Fastenal, so much for this being a snoozer of an earnings. I kind of pointed that out yesterday, that it usually doesn't do much exciting on earnings. It's got pretty bland performance in terms of the action on earnings day. Not so much today. 17% gain on the day. They beat on earnings, beat on revenue. They said the tariffs, of course, it's an industrial company. They get a lot of their products from overseas. They said even though the tariffs have hurt them, they raised prices, and it didn't seem to matter. It didn't hurt. So people were willing to pay the higher prices despite the tariffs there. So they're not very optimistic about that going forward, but that was Fastenal. So a strong day today, also helping the industrials. Wendy's up 4% on the day. They have, what was it? What do they call it? An analyst day, right? So they have a big get-together. All the analysts can go. They talk about, everything. Analysts make their decisions and all that great stuff. Every public company does it. Wendy's was in the news because from that analyst day, they said, we're going to get into the fake meat stuff as well. However, we're going to do our own thing, right? We're going to go the route of Hormel. So Hormel said, we're just going to make our own fake meat, because Beyond Meats didn't want to partner with them, and it was like, oh man. So they made their own. Wendy's said, we're going to do our own thing too in the form of a black bean burger. We're not going to partner with anybody. Remember, Burger King partnered with Impossible Meats to do the Impossible Whopper, and McDonald's has partnered with Beyond Meats. So Wendy's basically just playing a little catch up there, wanting to be a part of the action as well, but they're going to do it with their own products. 64.5% of the S&P was above the 50-day moving average. You remember earlier in the week, we started in the mid-30s? That is the biggest week-over-week jump, which now you know why. October is more active. I've been pointing out the stats for you, how more active October is relative to other months. Well, now you know. You can kind of see that activity in just another area. So although we're talking about everything here, we point out, there's a big change in the stocks above their 50-day moving average. They were way lower, then above again. Well, that's the October volatility for you. Utilities continue to be the best there, with about 79% of those stocks above the 50-day, and REITs with 69% above the 50-day as well. You had 27 new 52-week highs. Some of the common names in there that we've been talking about here. So, there you go. Sherwin-Williams hit new highs as well, but kind of quiet after that. It did close lower, so that's 3 days of hitting new highs. So just taking a little bit of a break there. And then you got Apple. Apple hit new highs as well. It also hit new all-time highs, by the way. It did poke up there to new all-time highs, looking good. Very expensive company. TJ Maxx hitting higher new highs as well. Did that yesterday, so it was one of the more common names there. Walmart was also on the list, although one of their executives went back over to Air New Zealand. I caught just a gist of that news, but not a big deal. Ross Stores, a lot of retailers on the thing today because of consumer sentiment. The idea is the consumer's positive, they're ready to go spend money. You got the holidays coming up, it's expected that they're going to go spend money, so the retailers got a little bit of a boost there. You also had Dollar General, Home Depot also hit new 52-week highs, so that was kind of the moral of the story in the new high space. In the new low space, you got nothing. Hewlett-Packard came off lows there just a little bit, so no new lows on that one, and FedEx also came off lows. So there were actually no new 52-week highs there. 52-week lows, I'm sorry. No new 52-week lows. In other news, the SEC denies another Bitcoin ETF. They're trying, but Bitwise was trying to put out a Bitcoin ETF. They got rejected by the SEC. Next week, no earnings on Monday, but hold on tight. Tuesday, is full of earnings, and it starts with the financials. Goldman Sachs, JP Morgan, what did we put down here? BlackRock, Wells Fargo, Schwab, out of the Citigroup as well. That'll all come out Tuesday morning. We'll keep you posted, of course. Out of those groupings, Goldman Sachs is the best performer, beating on earnings 90% of the time. Also the best performer on revenue. JP Morgan comes in second, 82%. And then Tuesday after the close, you got United Airlines and maybe United Healthcare, I think. I didn't write it down. If you're wondering, let's look at the S&P 500. What is the most volatile stock on earnings? Anybody want to take a guess on that one? Meaning they report earnings, and whether they report in the morning or in the afternoon, the next day or the day of earnings being the most volatile. Which stock has the most volatile moves, meaning the biggest distance between high and low on earnings day? It is, and I know there's a delay. I was trying to see if it's a delay. Sorry about that. Netflix. Netflix is the most volatile. Average one-day change of 12.78%. That's, so just so you know. Twitter's a close second there, 12.47%. So those are coming up here. It should be a rather active time for earnings, and we're going to try to give you some more stats and cool stuff like that as we go through it. All right, I'll take your questions there. I pretty much covered everything I need to cover. Sold your AMAT shares. All right, it's been a while. Yeah, finally got a chance to pull those things out. Almost back to highs there, hinting at breaking out at new highs, but nice. You just decided to close them out there. Social Security increase, yeah, in the scroller below, increased by 1.6%. Unfortunately, that's lower than the previous couple years. You had 2.1 and 2%, I believe, the year before. So it's a little bit lower. So slightly lower cost of living increase for your Social Security takers out there that are eligible and doing it. I like it. People are buying and selling based on somebody's tweets. Makes you think of how dumb we are as investors. It's tough. Yeah. There's always some reason to buy or sell, right? You notice how there's just never a day where people bought and there's no reason at all. There's never a day where the markets fall and nobody had a clue why. There's always something that we're responding to. Yep. I think Huawei was a separate part of the deal, not part of this trade deal. Huawei's, that news came out earlier in the day. They're going to allow some interaction there. I didn't catch the whole bit of it there. Yeah. Netflix, Tesla, Amazon, Tesla. Oh, you guys are guessing. Wow, that really is a delay there. You guessed it right, Enrique. Netflix. Yeah. Thoughts on Ruth? Is that a symbol? Ruth's Chris. Never looked at this one. Honestly, never even looked. I didn't even know it was a public company. Wow. So, a tough one there. I mean, it's not one I'd try to pick the bottom. I'm not sure what the question is there, but yeah, it did hit a new 52-week low. Nice little recovery. They're going to have earnings coming up here next couple weeks, so maybe that'll help. I don't know. It's one of those places I always think about, like, man, I'd like to go there, and then I never do. Thoughts on Beyond Meat's finally going to 100? Yeah, which is down. So, yeah, broke through the lows there today. Not a lot of volume. It didn't really get a lot of attention there. I know a lot of people are waiting for it to fill that gap to go back to 100. If you're sort of a, what do you call it, technical trader there. They got earnings coming up here, so that'll be probably the next time you see the excitement there. Yep. Yep. James is sitting in 80% cash. Is that a bad idea? It doesn't feel good on a day like today, but you're going to have to go through that a little bit if you're thinking that things are about to roll over. It's just going to be some time you're going to have to sit through that. Yeah. Late next week on the Econ News. The beginning of the week's very quiet, by the way. My man, Jazz Financial, I don't know what that means. Am I tempted with the high dividend JCap, or is it a good entry point for the long term? You're probably tempted there. Yeah, it's getting a little extended. I could understand maybe trying to pick off a little bit because it's getting extended, but boy, that is the definition of a stock that nobody loves right now, which there's an argument to be made for those, you know? Yep. I know. I've been watching what's going on with you guys and the power over there in California. It's so weird. That's just hard for me to imagine, you know. What funds should you put in your Roth IRA? I have no idea, right? Depends on what your goal is, what you're shooting for, how long you have till retirement, how much risk you want to take. You could compare some of our funds on our website and see like where you land in that category, but yeah, that's too general of a question. Yep. Smart beta is really popular, but it sort of came and went already. It's like it gets a little attention. It's like socially responsible investing. They try to make a big deal out of it for like a week all over the place, and then it goes away, and then it comes back, and it goes away. It can't seem to stick. What's the best discount store? I don't really go. Is it a Marshall's? There's a Marshall's or something by my house, and I'll just go in there and just grab the first pair of shorts I can find that's, you know, my size, and I'm just like, whatever. Don't ask me about discount clothes and stuff. I just don't do it. If you're asking about the stock in general, I don't like the idea of Five Below. Five Below, I think, is I mean, it's an interesting company. I get it. It's all clear in color and shiny and stuff, but I think it's a tough one there. Easy for other stores to compete if they want to without doing a whole lot of change in infrastructure. Yeah. Sorry if I missed some of your questions there. Did I catch the Kramer talk with Bob Moreno's prediction of a 10% drop? Nope, I didn't. Statistically, we're due for one. So if he was saying that we're due for one, I could certainly understand that. Ashish, thoughts on the whole QE? Well, it's not QE from the Fed. Is it good for market returns looking forward? Historically, it's not good. We went over this last night for our customers to kind of show with the Fed putting in that money, trying to take up the long end of the yield curve and pull things back up. That's what fund managers are going to be watching very, very closely. I don't like it. Yep. I don't like it. Is BBBY on a comeback there? That's what people think, right? You got a new CEO that came from Target. A lot of people think he's going to do great work there. In the short term, can you buy it after it's now higher by over, 30% in just a couple days? That's a tough one. I couldn't justify like paying 30% more. I would have to hold back, see if I could get a little discount. Schwab reports on Tuesday, just as a heads up. I don't mind talking about them, by the way. They report on Tuesday their earnings coming out, which is going to be real interesting for them to talk about expectations now that there's no commissions and everything. Granted, Schwab makes a boat ton of money on asset management and stuff, so they'll be okay. But you're looking for it to go back to 40. I think that's too big a risk relative to the reward there. You're only asking for, 250 on the upside there. You got a lot of overhead resistance and a lot of, a lot of churn to fight through, lots of selling pressure to try to fight through. I don't like the idea of that. There's got to be something else with more clear space above if you're a technical trader to look for. Yep. Is it possible to build a long-term portfolio to outperform the market with a 2 to 3 times leveraged account, and how would you feel it might be done? I don't think you could, to be honest with you. There's such a huge drag on those leverage products. You'd have to have really good timing, and the markets wouldn't be able to go sideways for a while. And because of that, I don't think you could do it. It's an interesting study that I don't know of anything that's been done to sort of study that, so we could probably do that, but it's just such a huge drag cost-wise. My thought would be to go with just regular ETFs, whatever you could find that was the best cost for the performance, and my thought would be to allocate in a way that picks up the speed rather than trying to get the speed from a higher cost product. Maybe that was too much of an answer, but I think hopefully you get what I'm saying. You're very welcome, Timothy. Thanks for watching. Yeah, I love it. I don't know what that means. All right, I think I've basically done it there. We're going to wrap it up for the week. You guys got better things to do on a Friday, I'm assuming, but it's back to work for me. What do you think of bond ETFs? There's a lot of great ones out there, especially that ladder bonds. BlackRock's got a lot of great products there where they do all of the laddering for you. You can pay for it, though. I mean, they're not like low-cost ETFs, but certainly worth it, I would think. I do think. So anyways, we'll wrap it up there. Have a great rest of your day. We'll be back next week to do this all over again, of course, in earnings season. So be ready. It's going to be a lot to talk about. Get your rest. I'll be here and ready for you. And thanks for watching. I appreciate it. See you.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.